In fact, let's take that conversation ahead. We've got Mr. Ajmera back on the show. Mr. Ajmera, hi, morning, and thanks for your time. Congratulations on the kind of quarter and the year that you've seen. Looking ahead, you've guided for 2,200 crores on the pre-sales front. It was 1,600 last year, and you've managed to surpass it. But this jump from 1,600 to 2,200 is quite steep. What gives you the confidence of meeting this number?
Thank you very much for us inviting us. I think the market is, pretty supportive with listed and branded players and well-established players. And what we see is with the way, in spite of all this resilience with the war situation, there is a good amount of inquiry which is still coming. Although traction is going a little slow, people are taking a bit more time than what they were taking earlier. But we are still very confident with the way market is going, and we feel that it will continue in this financial year. We are planning to launch about 7 to 8 projects with a total GDV of around 6,000 plus crores. And that is what is giving us confidence that we'll achieve about 2,200 crores of pre-sales in this financial year.
Okay, so that looks really solid, and that's a very good guidance as well. Talk to us about what's your outlook on collections. They've also seen a significant uptick in quarter four.
Yeah, lot of our projects are under fast execution, and we are our most of our collections are based on project completion or project execution. So it is a direct link about for execution of our projects versus the collection which is coming, and that is where we have seen good numbers of money coming through collection, and that's been a good rise. Even this financial very positive about the collection guidance, and we will continue that to grow in the coming financial year as well, because a lot of our projects are under midway under construction, and that we are sure that we will have a good run rate on that too.
Okay, any visibility on what that number could be, Mr. Ajmera?
Little difficult to say, but I think it'll be definitely a growth of around 20-25% from what it is today.
5% uptick on your collections from FY26 for FY27 is what you're guiding. Mr. Ajmera, you did mention the GDV that's in the works right now, about 6,200 crore rupees. Talk to us about geographically where these projects are going to be lined up. What is going to be the share between Mumbai, Bangalore, and maybe any other geographies if you're targeting?
So most of our geography, about 75% will be from Mumbai. We have around 8 projects which we are planning to launch, out of which, two are from Bangalore, one is in Pune, and the others are going to be in Bombay.
And, just want to get your sense on how things are panning out on the ground. We've been hearing from a lot of players that because of the elections in West Bengal, you did have a lot of labor that has gone away from the market. Now they've started to come back. But have you seen any operational slowdown on the back of that?
Yes, definitely. In the month of May, we had seen a huge slowdown. A lot of problem was there, and it was a double whammy impact because of the gas storage shortage, because of the labor shortage for the elections. People had gone to Bengal, and usually during the month of May, labor definitely goes back to their hometown. So all these three had a ripple effect coming in during the month of May, and we had seen a lot of slowdown in our sites. But now we are slowly starting to see labor coming back, and hopefully we should try to manage with the delay which has happened in the month of May.
Absolutely. And Mr. Ajmera, also talk to us about how your realizations are shaping up on ground. I understand that on the back of the Middle Eastern war that we're seeing a lot of building materials. We've seen a lot of inflation over there as well. Are you passing on these costs? Are you planning to pass on some of these hikes, and what has the impact been on the business?
See, right now, overall, if I have to currently see, because it is a a real estate project usually takes about 2 or 3 years for it to complete. So it is not that, today I may have an impact and tomorrow it will come to stabilization, and then we have to see the overall impact on the cost. As of now, we are not passing on that impact to our customers from whom we've already booked, because that we can't do and we do not want to do as well. But however, if this continues, probably in our pricing, there might be a little bit of hike. But overall, currently it is about 4 to 5% of cost overall increase, incremental cost in the current market scenario. However, when the project is getting completed, if this still remains, then definitely there might be a hike in the upcoming or the future launches.
Okay, understood. And lastly, Mr. Ajmera, I also believe that you have presence in the UK and Bahrain. Especially want to know what the situation is in Bahrain right now, given everything that's happening in the Middle East. Any disruption to the business?
Well, we've exited from Bahrain a
Okay.
long time ago. We do not have any more projects. We've sold that thing and we are only hoping to get realization from the project because that's how we've done the deal. But right now, we have no exposure in Bahrain. And all our London projects are also completed and we are just awaiting one or two projects realization to come. But beyond which, most of all of our concentration is in India now, and we are looking at primarily Bombay, Pune, and Bangalore.
Okay, so that sounds good. And Mr. Ajmera, on that note, thank you so much for your time. Congratulations on the quarter you've had. And we hope to keep interacting with you as and when you come out with updates. Thanks so much for your time.
Thank you.